What separates the ultra-wealthy from everyone else? Is it luck, inheritance, or something more strategic? Today, we're diving deep into the financial blueprints that billionaires and multimillionaires use to build and preserve their wealth. These aren't get-rich-quick schemes. They're time-tested strategies that require patience, discipline, and often significant initial capital. The first secret to building wealth is truly understanding the power of compound interest, what Einstein allegedly called the eighth wonder of the world. Compound interest means you earn interest not just on your original money, but also on the interest that money has already earned. The ultra-rich don't simply save their money. They put it to work so it grows faster and faster over time. Here's how it works. If you invest $1 million at a 10% annual return, you'll earn $100,000 in interest during the first year. In the second year, you earn 10% not just on your original million, but also on the $100,000 you earned last year. That means you make $110,000 in the second year. Over time, this effect multiplies. By year 20, that original $1 million grows to more than $6.7 million, just by letting your money compound. The wealthy know this simple math. Staying invested for a long time is more powerful than trying to perfectly time when to buy or sell. That's why they start investing early and keep adding to their investments, giving their money decades to grow and compound. For example, Warren Buffett made 99% of his wealth after age 50. Not because he started late, but because compound interest made his returns accelerate the longer he stayed invested. Secret number 2. The ultra-rich focus on acquiring assets, not just increasing income. While most people chase higher salaries, wealthy individuals chase cash-flowing assets. Real estate is a prime example. Instead of buying one expensive home, they might purchase multiple rental properties. Each property generates monthly income while potentially appreciating in value. They leverage other people's money through mortgages to control more assets than their cash would normally allow. Business ownership is another key asset class. Rather than working in a business, they own businesses that generate income whether they're actively involved or not. This creates multiple income streams that work 24/7. The wealthy also invest in appreciating assets like stocks, bonds, and alternative investments. They understand that assets put money in their pocket while liabilities take money out. The third secret is strategic use of leverage, using borrowed money to amplify returns. This is perhaps the most misunderstood wealth-building tool. When used correctly, leverage allows you to control more assets with less of your own money. For example, if you buy a $500,000 property with $100,000 down and the property appreciates 5% annually, you've made $25,000 on your $100,000 investment, a 25% return. The ultra-rich leverage their assets to acquire more assets. They might use their stock portfolio as collateral for loans to buy real estate, or use real estate equity to invest in business opportunities. This creates a multiplication effect on their wealth building. However, leverage is a double-edged sword. It amplifies both gains and losses, which is why wealthy individuals are extremely careful about debt-to-asset ratios and cash flow management. Secret number 4. The wealthy view taxes as their largest expense and plan accordingly. They don't evade taxes. They legally optimize their tax burden through strategic planning. They maximize tax-advantaged accounts like 401ks, IRAs, and HSAs. They time their income and expenses to minimize tax impact. They use business structures like LLCs and corporations to take advantage of business deductions. Real estate provides numerous tax benefits through depreciation, which allows them to show paper losses while cash flow remains positive. They might also use 1031 exchanges to defer capital gains taxes when selling investment properties. Charitable giving serves dual purposes, supporting causes they believe in while providing tax deductions. Many wealthy individuals establish private foundations or donor-advised funds to maximize their charitable tax benefits. The fifth secret is sophisticated diversification. The ultra-rich don't put all their eggs in one basket, but they also don't over-diversify to the point of mediocrity. They diversify across asset classes, stocks, bonds, real estate, commodities, and alternative investments. They diversify geographically, investing in both domestic and international markets. They diversify across time through dollar-cost averaging and rebalancing strategies. Risk management goes beyond diversification. They maintain adequate insurance coverage, including life, disability, and umbrella policies. They structure their assets in ways that protect them from lawsuits and creditors. And they keep emergency funds and maintain liquidity for opportunities. Secret number 6. The wealthy understand that your network determines your net worth. They invest heavily in relationships and surround themselves with other successful individuals. This isn't just about social status. Their networks provide access to exclusive investment opportunities, business partnerships, and valuable information. Private equity deals, hedge fund investments, and real estate syndications are often only available through professional networks. They join investment clubs, attend industry conferences, and participate in mastermind groups. They understand that collaboration often beats competition when it comes to wealth building. The seventh secret is their commitment to financial education. The wealthy never stop learning about money, markets, and new opportunities. They read financial publications, attend seminars, and work with teams of advisors including CPAs, attorneys, and investment managers. They stay informed about economic trends, policy changes, and emerging markets. They also adapt their strategies as their wealth grows and circumstances change. What works with $100,000 may not be optimal with $10 million. They regularly review and adjust their portfolios and strategies. Perhaps the most important secret is their long-term perspective. While others focus on quick wins, the ultra-rich think in decades, not years. They're willing to sacrifice short-term gratification for long-term wealth building. They reinvest profits rather than immediately spending them. They make decisions based on where they want to be in 20 to 30 years, not next month. This patience allows them to weather market volatility, take advantage of dollar-cost averaging, and avoid emotional investment decisions that destroy wealth. These wealth-building secrets aren't magic formulas. They're disciplined strategies that require commitment, education, and often significant initial capital. The ultra-rich succeeded by understanding these principles and applying them consistently over time. The key takeaway isn't that you need millions to start, but that you need to think differently about money. Focus on acquiring assets, leverage time and compound interest, optimize taxes legally, diversify intelligently, build valuable networks, continue learning, and maintain a long-term perspective. Remember, building substantial wealth is a marathon, not a sprint. The strategies that create lasting wealth are often boring, require patience, and demand discipline. But for those willing to apply these principles consistently, the potential for financial freedom becomes much more achievable. Start where you are, use what you have, and do what you can. The path to wealth building begins with understanding these fundamental principles and taking the first step toward implementing them in your own financial life. If you found this breakdown of wealth building secrets valuable, make sure to like this video and subscribe to the channel for more in-depth financial content. Hit the notification bell so you never miss our latest insights on building and preserving wealth. Your support helps us continue creating detailed educational content about the strategies that truly work for building financial freedom.